Hey y'all, Noreen is back here to provide you practical people with practical insights and strategies. Today we're talking about down payment. In this video, I will talk about not only what a down payment is, but the requirements that are involved with the down payment, as well as provide down payment assistance programs that you can look into. Don't sleep on that. And I'll provide strategies in how to best save for a down payment. Whether you're looking to invest in a new home or you're looking to find your forever dream home, this video is for you. So sit back, relax, and let's get ready to debunk. Please keep in mind, I am a licensed realtor. I am not a financial advisor. So I'm providing this information for educational and informational purposes only. Okay, so quick definition on what a down payment is. A down payment is the amount of money a buyer puts towards the purchase of a home. And this can range from 0 to 20% or more if you choose. If a home costs $100,000 and has a down payment of 20%, that means you as a buyer have to come up with $20,000 to put towards the purchase of that home. Down payments have the power to lower your monthly payment. The more you put down, the lower your monthly payment may be. Also, it allows for you to get better loan terms. So if you put more down, then you open yourself to having more favorable loan terms, such as a lower interest rates. And it can also open you up to have a wider range of loan products available to you. Another thing is that it gives your home immediate equity. So once you put that amount down, that is automatically translated as equity into your home. If you decide to put in an earnest money deposit at the start of the transaction, your earnest money deposit, also known as an EMD, will go towards your down payment amount. So you'll see that as a deduction when it comes to your final closing cost. In all circumstances, the down payment is paid at closing. All right, as I get into the meat of things, I will talk through the minimum down payments required for certain loan products. Just know that I'm only going to discuss the minimum. However, you can decide on what that maximum is. You're always more than welcome to put in more towards a down payment if you so choose. All the loans I will talk through are mainly government loans, but I will discuss conventional loans. Conventional loans can be obtained from traditional banks, credit unions, and also private commercial lenders and brokers. First, FHA loan administered by the Federal Housing Administration. For this loan, the minimum credit score is 580. And this qualifies you to put 3.5% down, so a down payment of 3.5%. Now, if you have a credit score between 500 and 579, you may have to put down as much as 10%. But generally, this is one of the lowest down payment amounts that a loan product offers. One of the lowest, not the lowest. With an FHA loan, borrowers must also pay for a mortgage insurance premium, also known as an MIP, and this is for the life of the loan. You pay part of the MIP upfront when you pay for the closing costs, and then the rest of the payment is spread out throughout the life of the loan. Next, onto a VA loan, and these are loans guaranteed by the U.S. Department of Veteran Affairs. For this loan, borrowers can put as low as 0% down, which is awesome. And there isn't a technical credit score requirement, but typically borrowers have a credit score between 580 and 620 and are able to get approved for this loan. This loan is only available to current and former members of the armed services. This loan mainly applies to owner-occupied properties. However, you may also be able to use this for home construction or home improvements for properties for up to 4 units. Remember, it's owner-occupied, but it can be up to 4 units within this home. This loan also doesn't require any mortgage insurance premiums, but there may be a VA funding fee. Next, we have the USDA loans from the U.S. Department of Agriculture. And for this type of loan, similar to the VA loan, 0% down. Another aspect that's also similar to a VA loan is that there is no credit score minimum for this type of loan. However, lenders tend to approve borrowers with credit scores between 580 and 640. Similarly, the USDA also has a Farm Service Agency loan, FSA loan, and rural development loans. These programs offer direct guarantee loans to farmers and their families for rural housing. And best of all, it's up to 100% financing. So this loan can cover the cost of the house 100%. All right, now on to conventional loans, which I'm sure a lot of you or many of you heard of conventional loans. Conventional loans typically require a credit score of 620 and above, and they offer anywhere from 3% to 20% down for the loan. This is in relation to the loan to value ratio, also known as LTV, which looks at the loan amount as compared to the property value. So if you have an LTV of 75% to 80%, meaning that you are borrowing more than 20 to 25% in order to cover the purchase of this loan, you may be required to also pay for private mortgage insurance, also called as a PMI, which lenders charge as a way to protect their investment and allowing you to borrow in excess. So allowing you to borrow more than that 20, 25%, even 30%. There are some loan products that don't require you to be charged a PMI if you put less than 20% down, but most do. PMI protects the portion of the loan that is not covered by the down payment. Lenders charge this as a way to protect themselves in the case of foreclosure. They figured that if you put more money down, there's less risk of defaulting on the loan or of foreclosure. Plus, the more you put as a down payment, the less the lender has to try to get out of the home in case of a foreclosure in order to break even. The PMI may automatically terminate, and or you as a buyer can request to have it terminated under certain circumstances. This happens when the LTV is at 80% or higher, but you want to talk to your lender about the specifics regarding this. Last but not least, on conventional loans, typically they come in 30-year or 15-year terms. So that means that you are paying this mortgage for the next 30 years of your life or 15 years of your life. I talked a lot about federal programs or national programs, but there are also state-specific programs. For example, Maryland has a cool program called the Maryland Smart Buy, in which Maryland assists buyers with student loan debt by providing up to 15% or $20,000 of a home's purchase price to pay off outstanding student loans. We also have MMP, which offers 30-year fixed-rate mortgages with down payment and closing cost assistance. Cousin to the MMP is the MMP First Time Advantage program, which offers lower interest rates for first-time home buyers as well as down payment assistance. There's also county-specific programs. For example, Prince George's County has the Pathway to Purchase program, which offers up to 25% for first-time home buyers to apply towards down payment assistance and closing cost assistance. There are also counties and cities in Maryland that offer relocation incentives in the forming of housing assistance in order to incentivize you to move into that city or county. For example, in Anne Arundel County, they offer up to $20,000 in down payment assistance, and so does Baltimore County. They also offer a settlement loan exchange program that gives buyers up to $10,000 towards down payments. Another assistance program that can be applied in Maryland or nationally is the Good Neighbor Next Door program from the U.S. Department of Housing and Urban Development. Essentially, this program is available to firefighters, police officers, EMTs, and teachers. For this program, they offer up to 50% off the house list price in certain revitalization areas, and the minimum down payment is only $100 for eligible homes. Know that as a buyer, you can and should take advantage of both state and federal programs. All right, so on to tips for saving for a down payment. Now, these are going to be in any order, and they are just general advice. Take one, take them all. It's up to you, but let's get started. So to start, you want to set a realistic financial goal. And you can do that by calculating how much you will need for a down payment, which I have linked mortgage calculators down below in the comments. And when you're thinking about what your payment and down payment could look like, you also want to factor in the closing costs. So closing costs are typically 2 to 5% of the sales price. Another idea is to budget adequately. So having a separate savings account for your housing costs, or just a separate bucket for housing expenses. And with this savings account, you can have automatic withdrawals. So it's kind of like you're taking payments out of your paycheck and just putting it away as if you're paying for a separate bill. And in this savings account, I highly recommend putting your savings in a high yield savings account so that you can earn interest within your savings, so your money can be working for itself while you're doing your other work. Other ways to help you with budgeting and adding to your savings fund is to negotiate your bills down. You want to cut extra expenses or make more money. You know, there's always a good side hustle that we can all get into. And you also may consider saving your bonuses, any cash rewards that you are able to receive, any gifts, your tax returns. Saving all those large funds when you get a large lump of money, putting that towards your housing costs can go a long way. Then couple that with putting your savings in a high yield or high interest savings account. You can really see that money grow much more rapidly than ever before. Echoing that same sentiment, you might consider taking a portion of your housing savings, not the whole thing. I wouldn't recommend risking all of it, but a portion of it, and investing it in higher yield, higher churning investment strategies such as your stocks, your bonds, your ETFs, your crypto, maybe even retirement and gold. So you have an avenue for that money to grow a little bit more quickly. Make sure you pull in and pull out. You want to investing is a whole nother subset. So definitely seek advice on how best to kind of put your money in and take your money out. But this is another avenue to grow your money a little bit more quickly than just the high yield savings account. But the high yield savings account is it's a safer way to grow your money. It won't grow as fast as those other investment vehicles, but it will still grow. Let's take a pause and hit that like button if you like what you're hearing and find it so valuable and useful. This allows the content to be shared to other people that will also find it helpful and useful. And I personally thank you for it. All right, back to the show. We talked about ways to not only save and budget your money, but invest it so that it can grow and add to how much you can put towards your down payment. But let's briefly talk about the upside and the downside of putting more down payment or less down payment. So if you put less down, you may have that PMI that may be charged to you, but you can buy a home sooner than later. And you have the option of putting that cash that you would have put towards your down payment into other investments or to use for other means. Also, you may be able to qualify for other assistance programs that help you with the down payment since you don't have that cash at hand. So you can get help for the home versus use your own cash. And you may have the opportunity to earn equity without putting as much down. Should your home appreciate pretty quickly after purchasing it without you having to put as much down. On the other side, if you put more down payment, that will help to decrease your monthly payments over time. That may also likely qualify you for lower interest rates. And best of all, you won't have that PMI. Plus, you can have equity in your home from day one. There's no kind of second guessing this. and you have a larger range of loan products available to you, and you just look more desirable to lenders overall. A real quick tip: if you're looking to purchase a second home, lenders will often ask for a higher down payment, and it may also come with higher interest rates. Now, there are many conventional ways to cover your down payment, which I mentioned earlier. However, there are also non-conventional ways to get this down payment covered. For example, for those of you that have a Roth IRA and you've had this account for at least 5 years, for first-time home buyers, and first-time home buyers in this sense are any home buyers that haven't owned a principal residence in the last 2 years. If this is you, you are able to take out up to the amount that you have contributed to that account, plus an extra $10,000, and put that towards your purchase of your home, tax and penalty free. So the amount you have been able to contribute to your Roth IRA, you are able to take that amount up plus up to an additional $10,000 and use that towards the purchase of your home, tax and penalty free. Yeah. There's also a 401k loan where you're able to take 50% or up to $50,000 as a loan from your 401k, and that is also penalty free. You have up to 5 years to pay the loan, and if you change jobs, the loan may be due sooner, but it's a possibility. I mentioned investments earlier, but you can take money from crypto or your stocks and use that towards the down payment purchase. You may even consider using a crypto-friendly lender. There are those that are out there. Crowdfunding is also another option, from nonprofits, GoFundMe, from churches. Community is here to support, so leverage them as much as you can in order to reach your goals, because a lot of the times your community wants you to be successful as much as you want to be successful. Pro tip: you can also use seller concessions as a way to fund your down payment. Seller concessions are contributions the seller makes on behalf of the buyer towards the transaction. So you could negotiate for the seller to pay part of your down payment as a seller concession. Now, you might not necessarily tell them that this is for your down payment, but if your down payment is $10,000, you might ask for a $10,000 seller concession and use that concession towards your down payment. And last but not least, there are loans that I mentioned that you can put towards your down payment. There's also grant programs, gift money. The possibilities are endless. It's always best to talk to an advisor, a realtor, or financial advisor when you're considering these options. But there are many avenues to put towards your down payment that's not just cash out of hand from your paycheck. So to close, I would say that you definitely want to weigh out all your options before choosing a path to take, and be very, very practical and realistic to your particular circumstance. When it comes to how much you should put down or not put down, it really all depends. There are pros or cons to both sides. It depends on when you're ready to get into the housing market, what you have saved up, what you're willing to put towards the home. Is this going to be your forever home, or it's an investment? Cash can go a long way. And yes, it can be favorable terms when you're looking to buy a home, but it's still cash that can be favorable for your own personal circumstance and other avenues that you want to use it for. So it's helpful to talk to someone to navigate this, but this can help give you a starter guide in how to weigh out your options. I briefly mentioned mortgage terms earlier, either having a 30-year mortgage or a 15-year mortgage. And I would say, if you think you will have steady income or more income in the future, then maybe going for a longer mortgage term, so like a 30-year mortgage, may make more sense for you, as you will have lower monthly payments now. However, if you have a large sum of money now and you think that your income may be unpredictable in the future, then maybe having a shorter term mortgage may make more sense for you. Well, that's all for today, folks. Don't forget to hit that subscribe button. Check out my other videos because they're just as informative, and I'll catch you next time.